Hey, what's going on, y'all? Welcome back to another brand new video. And today's video, I'm going to be explaining how you guys should be treating trading just like a business, right? It should be treated like a business, and just like any other job, you should be really clocking in, clocking out in terms of day trading. You should not be taking this as a side hobby or hobby, because at the end of the day, real day trading, you're risking your own money, your own time into the charts, right? Now, in a typical job, you're just risking time. But in trading, you're risking not only time, but also money, which each and every single trade you put on. And so, how I like to view trading as a whole is every trade you put on is a business expense or a business decision, right? So, whenever you put on a trade, you always have to think first, is this a business decision I would make if I truly ran a business? Is this really a trade that is A plus, or is this like B plus setup, but with a lot of confluences that I would generally trade or take the trade, risking my own capital behind it? Because here's the thing, when trading, you're always risking your own money, whether you're trading prop firms or not, because you're still risking the valuation and the activation fees. So those can most definitely also add up, especially if you're gambling, because I've done that in the past when I started trading, where I'll just rack up fees and fees and fees, even with my own personal accounts. But those are the old days, and I've gone past those days. But nonetheless, I'm here to tell you guys and help you guys really save money and your time from trading by basically treating trading like a business in the beginning. Too many people online I see, they're treating trading like a hobby. It's not a hobby. It's especially if you're serious. Now, if you're not serious about trading, you should probably just click off this video. This is not for you. I don't recommend you go down this career path at all if you're just gonna mess around and take random trades all day, because that's called gambling. And you guys know gambling is for the casinos to make money. Essentially, what you're doing is whenever you're taking random trades with no data back tested to prove the system works with no edge, you're just giving away the money to the markets. And I'm going to show you guys something very interesting later on one of my data statistics, something I actually keep track in my private trading journal, which is R. And R stands for random, okay? And these are setups that I've taken in the past where they are completely random gamble trades. They don't follow specific mechanical system entry, stop loss, TP placement, nothing like that. It's completely random basically of a trade. Whether I place that trade off fear, greed, FOMO, whatever, you guys know all the different types of emotions and psychology that comes into day trading. So you guys know essentially any random trade that you take is going off of those emotions. And we don't want to make emotional based decisions in our trading. We want to be making actual technical and fact driven decisions behind our trading. Now here today, it was Memorial Day, so we did have a holiday today. And you can see how crazy, it just sucks, man. We have good volatility when we have a bank holiday. But on days where we don't have a bank holiday, we just start chopping around. This month has not been the best in terms of price action. Like everyone has mentioned on the internet, like every single trading person has mentioned, but you can still be most definitely very green, just like me, for an entire month. Literally, I've only had like 1 or 2 red days this entire month. One was prior week, but so far, we're hoping to basically continue the green streak, man, here and end this week green. Hopefully with no red days this week. So there's that. But nonetheless, point is, you need to really treat trading like an actual job where you have an employer looking at you trading. Because a lot of people, you're just thinking, whenever you take these random trades, imagine if you had imagine this. Imagine you were working for someone else. Imagine you were trading for someone else's capital. Let's say you got hired at XYZ Bank or XYZ hedge fund firm. Yes, they're not going to be trading technicals like this, like we do. They'll be trading using mathematical models and quant stuff, because they have insanely big position sizes and they need to iceberg sometimes. They can't just fill them all at once like us without having to worry about slippage. Quick example, if you guys don't understand what I'm trying to say. I covered this in the previous video, but using my IFG indicator, for example, instead of us entering here, once this inverses, preferably this one above right here, because this is singular, instead of us entering here, and we can get like a 4-risk reward here, 5-risk reward today, man, off this trade here. If you did trade Memorial Day, again, I told the Discord, no trading for me personally on bank holiday, because we tend to get chopped. But surprisingly, look what happens. We get the cleanest price action delivery ever. We just have a V-shaped delivery, which is the perfect price action delivery you want to be trading. Unfortunately, on the bank holiday, it is what it is. But look, instead of us entering here with retail trader position sizes, even if you have like a 4-figure, 5-figure position size, you typically won't really get much slippage, right? You can enter here as long as there's enough liquidity. And that's why we trade during kill zones, because whenever you trade during kill zones, there's the most liquidity, most volume, you can get the best fills. And of course, if you're trading prop firms, that doesn't really matter at that point, really. So let's say you enter but here as a retail trader, but guess what? If a hedge fund wants to enter a position of 100 mil or 10 mil, let's say, they might get slipped and they'll move the market with their position immediately and they'll get entered here. So with the exact same trade, exact same stop loss, exact same entry timing, their entry price is way different than ours. Hence, guess what? With the risk reward system, depending on how good the edges of the system, it might become unprofitable because the risk reward will be cut significantly, right? And depending again how big the firm is, it could be even bigger. You might only be able to get less than 50% of your typical risk reward. Hence, you would need to adapt and trade something entirely different, which is where quant and mathematical models come into play to manage your risk accordingly. But again, for us retail traders, we don't need to worry about that. I'm not personally at 8 figures yet. I don't need to worry about that. I haven't had really any liquidity issues, mainly trading so far. As long as you're trading something liquid, right? Trade ES, NQ, gold. Oil is also somewhat liquid. There's also Euro USD. Just mainly trade the main pairs that are liquid. Don't trade some random coins, some random assets. Unless, again, if you have very little capital, I guess it doesn't really matter much to you in terms of volume and liquidity. The point is you still want something that, gives good movement, right? That's just a quick rant about how retail traders and hedge funds and other institutions differ in the way we trade. Now, real quick, going back to trading like a business, right? If you were hired at XYZ institution, hedge fund, to trade, think about you trading someone else's money. Are you going to be taking these random trades knowing that your job position, like your income, your stable income, working for these hedge funds and firms is on the line? Are you going to be taking these same random trades you're gambling with? And the clear honest answer is obviously no. You're not going to be taking these random trades that you're putting on your funded accounts or your personal account, trading live by yourself. You're going to be a lot more strict on yourself, a lot more disciplined, because if you make these mistakes over and over again, you will blow the account. And when you blow the account, guess what? You lose your entire job and even more, right? So definitely something to keep in mind. You really want to be treating trading as if you have a boss. Yes, we are trading because we want time freedom, location freedom, financial freedom. That is completely true. And that's what trading provides. However, you also understand that with that in mind, that also means you don't have a boss or employer to report to. You need to be your own boss. You need to set your own rules and discipline yourself. So just always, next time whenever you're trading, pretend someone is watching you trade. Okay, whether that's your parents, family, whoever I guess can be used as motivation to help you understand that you need to be making money in these markets or you're just going backwards, right? You need to be making money in the markets. It doesn't have to be every single day green. No one has a green day every single day. No one has a 100% win rate. But if you can sustain weekly green months, ending every single week green, every single month green, and of course, if every single month is green, you're going to basically end the year green, right? And that's the ultimate goal, right? We need to be making sure each and every single month is positive for us. Unless for some reason the market entirely changes. But that's, based on my experience, it's never going to happen. At least in terms of how price moves. And the reason why is there's actually a video online I watched recently talking about using a random math generator. It was able to generate literally patterns that we see every single day in the market, right? These are literally patterns that we see every day in the market, and that random number generator was able to create literally a market with all these patterns. Whether you see demand, supply, all these things, trend lines, these patterns all are existing in a random number generated market. And it's the exact same thing as the stock market, exact same thing as the futures, forex, whatever market you're trading, right? Therefore, what it's saying is basically price will always move like this, and it's not going to be changing anytime soon, right? So again, just make sure you adapt to market conditions, make sure you understand volatility, understand how you manage your trades better. But again, at the end of the video, man, just make sure that you are ultimately, every time you trade, make sure someone's watching you in terms of having that in the back of your mind, knowing that, okay, someone pretend you're working for another company. Okay, that's what you really have to ingrain in your brain. to help you develop this discipline to stick to your rules, your system, and not to be taking these random silly trades. Okay, as long as you can understand this and you can develop the discipline to just self-discipline and just trick your mind. Essentially, it's like almost like fake it till you make it. I don't like saying that, but it truly is what trading is. If you truly wanted to make it, right? You really just have to fake it as if you're a profitable trader, or you fake it as in you're faking your mindset that you are working for XYZ institution, right? You're forcing your mind to pretend that this is true, because when you do that, it helps alleviate some of the stress and pressure towards you actually, so you could take your trading a lot more seriously essentially next time you trade. So again, hopefully this video helps you guys understand that you should be treating trading like a business, like a real job where you can actually get fired if you're making these mistakes. Because think about it, if you're making the way you guys have been trading, if you're unprofitable right now, you know for a fact you get fired instantly, maybe even the first week, within the first week, based on these type of silly trades you guys be taking. You guys, here's some examples, and I'm explaining this because I did this when I first started trading, guys. I would, for example, let's just say I went long here, tight stop loss, and this happens all the time. Whenever we revenge trade, this is something I noticed from back then as well. I always trade with a tight stop loss. I'll get stopped out here on long, go short immediately. I get stopped out here on the short, and then look, you go long again, right? And you get stopped out again on a long, and you go short again. Like, I know you guys can relate to this. Almost every single trader, or in fact, every single trader has gone through an experience like this. This is nothing new, nothing out of the ordinary, but you need to get out of this cycle by treating trading like a true job, a true 9 to 5, right? Yes, you're not staying on the chart for 8 hours. Typically, own trade 3 hours per session. But again, you need to understand when to take advantage of good price action so you can stay on the charts longer to make more money, or when to maybe get off the chart earlier because bad price action is developing, right? Those are also certain things you need to dynamically adjust as you gain more experience in the market. But here's just some quick examples, man. And majority of times, you guys know, based on back testing, I've showed data of this, we typically do not do this. We do not typically deliver impulsively all the time. Majority of times, we will deliver in ranges, when price will rally up, going mean higher low, higher highs, higher low, higher highs, to make a trend. It won't just go shoot straight up like this. And what that means is majority of the time, whenever we're revenge trading, you want to know why revenge trading never works? Well, it's because majority of times the market is going between premium and discount. So every time you're revenge trading, you're literally shorting in discount, long in premium. That's basically the gist of most people's revenge trading. There's obviously some other ways of revenge trading, like over leveraging, on even solid trades, or maybe just bad setups you're over leveraging, or you're over leveraging on a random trade. That's even worse. I'd rather you over leverage on an A+ setup than over leverage on a stupid random trade in the middle of literally nowhere, right? In the middle of literally nowhere, you full port. Like, that's just silly to me. That's not trading. Just go to a casino, please, because you might even have a higher chance of making profit out of casino than in trading, because you guys don't know, the odds of casino are typically, some games like blackjack is like, I believe it's like a 49% to 51%. So the player obviously has a 49% edge, which is the minus 1% edge against the casino. So you have 1% less of an edge. But typically when they're revenge trading, if you go into stats and data, you have a much worse edge in terms of probabilities when you're revenge trading. And I'm gonna pull up a screenshot actually right now from my trading journal. All right, y'all, so here is a quick screenshot from my trading journal. You guys can get access again on my website if you're interested in trading journal. It's mainly customized for my strategy. But look, these are all my different types of systems I've traded in the past, right? Journaled every single one. And you can see, what is R? R stands for me journaling my random trades I take. And I recommend you guys to do this to help you develop a better trader mindset in terms of probabilities. You're not forcing yourself to take random trades, but whenever you do find yourself taking impulsive trades, random trades, you want to journal those random trades. It's very important. And you may ask, why is it very important to journal random trades? Well, because you need to understand you're making this behavior. And not just that, but look at this, random trades. I've taken 26 random trades out of this whole entire data set of trades. Look at the win rate, 12%. So whenever next time I decide, oh, I want to impulsively take another random trade or revenge trade, I go back to this. And what does this tell me? Look at the data, 12% win rate, 12%, my guy. That is horrendous, right? 12%. Now, some of you guys, your random trades may be lower than this percent wise in terms of win rate. Some of you guys may be higher. It just depends on how you're typically taking these random trades. But nonetheless, it's not a huge sample size of 26 trades, but still 12% is absurd. That means the other side of my trades is an 88% win rate. So if I just take the opposite of those trades, it's leading an 88% win rate, right? So hope you guys understand what this is really showing here, man. Like, just looking at your data will help you truly stop making these silly mistakes. Like, looking at this myself, I can clearly tell it's not working. So what Albert Einstein says is delusion. Delusion is doing something continuously over and over again, expecting different results, right? And this is literally what it is. If you're just taking random trades for the rest of your life, for the next 3 years of your trading career, you're not going to become profitable. Look at the win rate. Now, yes, this doesn't include your risk reward ratio, but I have memorized my risk reward ratio. For these random trades, it was usually around a 1 to 2 with the random trades that price went through and hit my stop loss. So still not profitable nonetheless with these random trades. So again, journal these random trades. Definitely keep a trading journal if you still are unprofitable. The only time that I would ditch a trading journal is when you have consistently proven to yourself when live trading that you can be green week after week, month after month. So hopefully this video helps you guys understand that you need to become your own boss, but ultimately basically treat trading like a business and not a hobby.